Your dividend empire, built by AI. Imagine waking up each quarter to see cash landing in your account. Automated dividends from a portfolio curated and managed entirely by AI. No late-night research, no obsessing over yield curves, no manual rebalancing. Just pure passive income compounding itself while you sleep. This isn't fantasy. It's today's reality of AI-generated dividend investing. If you're ready to stop chasing market swings and start building a self-sustaining cash machine, buckle up. This is MoneyMatic Masters, and the future of steady income is automated. How AI optimizes high-yield dividend stocks, the hunt for yield, and why it's broken. For decades, dividend investors have scoured financial reports, hand-picked companies with fat payout ratios, and hoped for the best. You'd pore over quarterly filings, compare sectors, and maybe, just maybe, catch a rising star before its yield got cut. But the old way is slow, reactive, and riddled with biases. Enter AI, your 24/7 dividend hunting co-pilot. Let's see how it changes the game. Mining data. No human can digest. Imagine a system that ingests earnings call transcripts, spotting tone shifts that hint at cash flow problems. Alternative data. Satellite images of factory parking lots, freight shipment volumes, credit card spending trends, macroeconomic indicators, interest rate forward curves, commodity price correlations, geopolitical heat maps, social sentiment, real-time feed of analyst upgrades, fund manager tweets, and retail investor chatter. AI parses all this in milliseconds, creating a multidimensional view of each dividend payer's health. It doesn't just look at yield. It looks at sustainability and growth potential. Imagine AI flagging a utility with a 6% yield, but also a rising debt burden and falling customer counts. That's a red flag humans usually spot too late. Conversely, it might spot a 3% yield tech firm whose cash flow metrics are primed for a future hike, long before Wall Street analysts catch on. Customizing your dividend universe. Every investor has different risk tolerances and income goals. AI lets you define your own dividend universe. Income. First, target stocks yielding 4 to 7% with a history of growing payments annually. Growth tilted. Focus on companies with lower yield, 2 to 3%, but 10-year dividend growth rates above 10%. Risk managed. Exclude any company with negative free cash flow or upstream-downstream reliance flagged by AI scenario stress tests. Once you set your criteria, AI continually screens the global market, adding new entrants, removing deteriorators, and notifying you only when a high-probability opportunity arises. AI doesn't merely compare a handful of financial ratios or rely on the occasional analyst note. It ingests literally trillions of data points every second and weaves them into a living tapestry of market intelligence. Imagine a multi-layered neural network that begins its work by pulling in raw market data, price, volume, FX rates, commodity futures, and cross-referencing them with granular economic indicators such as consumer spending trends, regional employment figures, and even real-time satellite readings of factory activity. It adds a layer of textual sentiment analysis, parsing earnings call transcripts, CEO tweets, and thousands of news articles daily, looking for the slightest change in tone. Words like cautious, expansion, or dividend review trigger submodels that adjust the risk score of each stock. Beneath that, an alternative data engine overlays consumer behavior signals, credit card spending patterns, e-commerce transaction volumes, logistics traffic, and identifies which companies are subtly gaining or losing momentum before any official report. A governance and sustainability subnetwork scans regulatory filings, ESG disclosures, and even legal databases to detect hidden liabilities, pending lawsuits, environmental fines, or executive departures that could upend a dividend promise. This end-to-end AI pipeline doesn't just flag yield anomalies. It builds a holistic health score for every dividend payer, continuously updated in real time. When an industrial firm's payout ratio creeps above 80%, but its cash flow submodel shows eroding free cash flow margins, and its sentiment engine detects a sudden spike in negative analyst comments, the AI designates it high risk and automatically excludes it from your portfolio universe. Conversely, a consumer goods company with a modest 3% yield, but a rising consumer sentiment metric and expanding e-commerce reach gets a high opportunity tag, prompting the AI to nudge your weighting higher, even before the next quarterly payout is declared. As a result, every buy or sell suggestion you receive isn't an isolated metric. It's the distilled wisdom of dozens of AI engines working in concert. The beauty of this approach is twofold. Human biases, fear, FOMO, or overconfidence, are removed, and you gain early warning signals that let you capture both rising yields and dividend growth catalysts well ahead of the broader market. By embedding this living scorecard into your dividend investing workflow, you no longer chase yield alone. You invest in yield integrity, ensuring each payout not only pays today but is engineered to grow, protected against hidden risks, and optimized for a future where dividends truly become your autopilot income. Backtesting at light speed. Humans might backtest a handful of ideas over nights or weekends, if they're skilled enough. AI backtests thousands of portfolios across decades of data under thousands of market regimes. Within minutes, you see which combination of yield, growth, and diversification would have produced the best risk-adjusted returns. You also uncover hidden correlations, like how certain REITs rallied ahead of rate cuts, or which MLPs outperformed during commodity price swings. This AI-powered time travel means you can design a forward-looking strategy that's been battle-tested across every bull and bear market. Best AI tools for dividend tracking and automating reinvestments. From manual spreadsheets to smart dashboards. Dividiary.ai. Automated data extraction from SEC filings, press releases, and financial news. Natural language summaries. 𝐻𝐸𝐧𝐞 Corp raised its dividend by 8%. Projected $240 more this quarter. Custom alerts for yield dips below your threshold or payment date anomalies. Automating dividend reinvestments. Dividend reinvestment plans, DRIPs, have existed for decades, but they're manual, inflexible, and often locked to one ticker. AI supercharges, DRIP. AutoDrip.ai is a service that collects your dividends across brokers and custodians, analyzes the optimal reinvestment targets based on yield, growth, and correlation, executes microbuys, splitting each dividend check into multiple stocks or ETFs. Instead of reinvesting 100% into the paying company, AutoDrip can allocate 40% back into that company, 30% into a broad market dividend ETF, 30% into a high-growth mid-cap dividend challenger. Automate your dividend wealth. If you're ready to transform erratic payouts into steady compounding cash flows, try Dividiary.ai. Sign up for Yield Pro Rebalance. Activate AutoDrip.ai. Download TaxYield.ai. Hit subscribe to MoneyMatic Masters for weekly deep dives into AI money-making strategies. If you learned something new, and drop a comment with autopilot on to join our private AI dividend investors group. Because true wealth isn't just about what you earn, it's about how hands-free you can make it. Let AI build your dividend empire, starting now.